Hello. How we doing tonight, guys? Hopefully, trading went well for all of you today. Definitely, it was a harder day for me. Truth is, it's not because of the price action. Sorry about that. I woke up late, and then that did mean that I did not take the first morning trade, which we'll see in a second. And I ended up semi chasing the whole day. There was no tilting in terms of risk management, but they weren't necessarily good trades. They were very risky trades, which I am okay with taking once in a while, not three or four in the same day. Thankfully, I managed to end the day slightly in profit. So we'll also look at how that happened. But truth is, it's a type of day where I just should have been up at the right time. And since I was not, I should have just closed my charts. So now that that is out the way, you guys can understand that no, I am not perfect. I make mistakes. I am 2 years, a little over 2 years in now. And shit, I still make a bunch of mistakes. Now it's more so an amount of mistakes per month. Before it used to be an amount of mistakes per day, right? So small progress, take the wins, make sure that whenever you are making a mistake, you recognize it, review it, and make sure to grow from that mistake. Now, enough positivity, motivational rambling. Let's talk about our chart, shall we? Very, very bullish day, all the way to go target current week's high. Very easy following day in my book, right? We did discuss it during the first PA review this week and Tuesday. I discussed about how there was a possibility for either a Wednesday low of week or a Tuesday low of week. And in this sense, we saw the nice Wednesday reversal with FOMC, which with the close of the candle, right? We have a retracement, very aggressive close higher. We have a very clear continuation towards a higher objective. I mean, after that, there is nothing else. So that is our clear objective. Can also use standard deviations, specifically of manipulation legs. This is the only thing I would consider myself. Why this one, right? Because that's the one that formed SMT, right? So I understand that this price leg is of bigger importance. And see now, our first level here is going to be -1, which we did not yet reach. And it is exactly the reason why tomorrow I'm going to be expecting continuation. So just to give you guys some insights into trading all-time highs, this is how I personally use it. Of course, I use recent price action, but also standard deviations of important price legs, once again, formed to SMT. If we go down to the 15-minute here, and I am going to leave this level on our chart, that is current week's high. But you'll notice that right here, it got taken way before the New York session, right? It got taken right after the open. So we saw the price open, go right up to previous day's high, which was right here, I believe. I think it was a London high of day. Yes, it was. Well, those relative equal highs right here. So we took out previous day high, expanded through it, and then took out the current week's high and had a retracement and then a continuation. Now, at this point in time, I have no criteria to consider this a trending day other than a large overnight expansion. But you'll notice just by looking at the indicators I have on, right? Just the sessions, how much divergence there is. London low, Asia low. London low, Asia low are open. Current day's low also open, but on both, that is pretty straightforward. But current day's high in this case, which is pretty much another way of saying the overnight highs, right? From the day's open to 9:30 a.m. Current day's high taken here. But as you can see, the same current day's high did not get taken on ES. So overall, I'm not going to draw 50 different lines to showcase SMT. But we can see a lot of divergence on both assets when they are uncorrelated. Is that high probability conditions or low probability conditions? Well, low probability. They aren't following each other, which means that they're always fighting one another, right? That is the best metaphor that I can bring up for you guys. It's a constant fight where they're pulling on the same rope. If they're both trying to go up, right? The rope follows one another, sure. But if one's trying to go down while the other's trying to go up, they're always pulling at each other, and vice versa, right? Always pulling against each other. And that leads to some pretty weird price action. It doesn't lead necessarily to high resistance price action where you don't see a lot of movement, but it leads most importantly into big spikes. Because if NASDAQ has been trying to go up for the last 30 minutes and ES has just been grinding slowly lower, well, perhaps one of them will win. And sometimes that's ES, sometimes that's NASDAQ. If that's ES, then all of a sudden you'll see a 100-point candle lower on NASDAQ while it's been going up slowly for the past 30 minutes, right? So just overall, did want to mention this. This is always something I am looking out for, and definitely scared is not the right word, but wary of, right? When the charts are heavily uncorrelated like this, I am more careful. Now, does that mean I cannot take a trade? Not at all. When we had 8:30 news, we had a high probability trading day, which means that right at the open, I can start looking for trades. But the question now is, what direction am I going to trade it? My overnight target has already been met, right? We talked about it. Well, I'm still bullish. I'm still expecting a bullish close. We're trading at all-time highs, which means bullish until proven otherwise. But overall, what can give you that confirmation, I guess? Well, you do have a London framework. So right at the open, I am looking to short to London low. Why? Because I know that there is a statistical probability that if we hit London high between 5 p.m., between 5 a.m. and 9:30, well, there is a statistical probability that we will reach London low. I don't need to think further than that, right? And you have that same framework right here on ES. So target at the open would have been to go lower. Now, after we take out London low on ES right here, which forms SMT at this level, now all of a sudden, I no longer have a target. And from that point on, could I consider a continuation to go higher? 100%. So just to be completely clear, I guess is the best way to put it, you could short up until London low and then you could long after. It's not important what your bias was on a day like today because both biases can be justified, but it's important where and how you engage with price, right? I can tell you it's okay to be bearish on a day like today, but it doesn't make sense to be bearish here after London low gets taken with SMT. But it doesn't. It's all about timing based on your specific bias and establishing a high probability framework. In this case, for short, didn't really have an entry right up until this fair value gap, which I think I showcased that before, but I like having my unicorns set with 2 thickness line, but if I bring it down to 1 thickness, you'll see it traded right to it. It's a little easier to spot. If you're ever curious, just use the magnet tool on TradingView whenever you're drawing something. As you can see, I'm pressing Control right now on my windows, and it snaps into place. So I just snap it right here. I don't let go of the magnet. I let go of my mouse, then the magnet button. And as you can see, the TradingView tool tells me that I got filled, right? That price went back there. Now, of course, depending on your broker and all of that, maybe this is not a fill for you. But we'll look at it as if it was. And then you have your 3PD array stop loss rule, which brings your stop all the way here. Quite a sizable stop, but nothing that would be bad enough. But hey, my target is London low. Nothing that would make it too bad is what I was trying to say. Sorry, guys. But right here, you can look at London low in this case and notice, hey, that doesn't offer me enough risk to reward, right? So is this a valid short opportunity? No. Now, of course, if you short it up here, sure. But that's not my model. I'm always looking for a unicorn. These are the moves I trade. These are the moves I like. I don't know how many ways I can say it. It's been backtested very thoroughly, and these are the results I expect. But even if you would have had no short opportunity at that point, London low and London high are taken. London low and Asia low, are taken on ES, which means that, hey, we have SMT here. Now you have a framework to go long, more specifically to current day's high. Now, of course, if you look at ES as well, you'll notice there are equal highs at this level. So, of course, you're trading counter to higher time frame SMT, but there's SMT on both sides today. Which means what? Which means we just don't care. I understand that the full day will be weird, will be high resistance, or will be jagged, and I have to be careful. How do I adjust to that? Well, take profit early. That is the best advice I can give you guys. When you're unsure about the day's direction, just take profit early on your moves. Be happy with smaller moves. Enough rambling. As we can see, we have our framework. Now we formed a bullish breaker here, bullish unicorn right here. Now, 3PD array stop loss rule, you have the fair value gap that you're using for your entry, and inversion fair value gap, and the other fair value gap. So your stop would be all the way down here, targeting current day's high. But hey, we have the same problem. This is below 1.7 R, and I do not take trades that offer below 1.7 R to my objective. It's important to note, because yes, of course, this trade did run a tiny bit higher, but that doesn't count within my calculation. It is to my objective. So what can I do in this specific area? Well, don't take the trade or wait to see if it offers a better entry. In this case, it did. You could have waited up to here. Now, of course, you could have also waited all the way down here, down here. Personally, what I like to do in cases like these is place half my position here. What does that mean? Well, worst case scenario, this is a half risk trade, and I'm quite happy with the result. Best case scenario, it trades a tiny bit lower. I can get my full risk, but with better risk to reward. Because if I go ahead and put half my position here and then half my position here, well, all of a sudden my average position, right, the average between the two entries is right here. Now I get a lot more for my move. And this is only specifically for the trades that do not offer enough risk to reward at their first entry. I noticed that when that happens and we retrace, we tend to go for a deeper retracement, right? So that's it. A little sauce that I have not shared before, I believe, but I didn't want to tell you guys. Overall, we're going to be pessimistic here. Sorry about that notification. I do have to answer a text message. All right, sorry about that, guys. It is important. But what I was saying is that beautiful trade. Right? I actually forgot what I was gonna say in this case. But wonderful trade, very simple, very straightforward. Yes, I was saying for the sake of the PA review, we're going to be pessimistic and only consider 1.7. I feel like it's better this way. I mean, someone could literally just go through the last 100 PA reviews, not even like listen at what I say, just like backtest the setups that are taken. So every time they see a box on my screen, like just take note of it, and you'll see the profitability of this model. It is not in question, and that is always considering the pessimistic outcome, which is what I like to do. And now just enough rambling right here, 1.7. And if we see, of course, it did run higher. In this case, I've talked about this before actually, but when I don't have a clear partial and kind of like my first take profit is my final objective, pretty much, right? Current day's high, there's nothing after that. We're at all-time highs. What do I like to do? I take a big take profit here. I go break even and I'll start trailing. And in this case, if you guys remember my logic for trailing, right here, this is too small of a range. So there's no really clear place to trail in this area. So the truth is, just been holding on. And as soon as we close above this, oh, that did not happen. This is the trade that I said I missed this morning, guys, by the way. So I tried a short here, ended up not taking profits, got broken even. So then I thought, hey, why not go for a long? Ended up not taking profit. Why? Because it did not offer enough risk to reward, got broken even, and I traded the PM, which we'll look at in a sec. But in case you guys are wondering, I shorted this, I longed this, and I got broken even on both, which was fucking amazing. Felt great. Very, very great. Okay. But right here, did not close above. Okay, so I can't use that range. This, though, is fine. So as soon as we close above here, right, you're looking at opposing ranges. So if I'm going long, I'm looking for a bearish range, right? That has to be a certain length. I said it. It has to be above a few candles. Once we close above it, now I can bring my stop to the low of this range. And in this case, I think that is the only trail with that specific logic. Anytime I talk about trailing a stop, I feel like consistency is more important to you guys than the best possible outcome. Tell me if I'm wrong, but I think it's actually more valuable. So I'd much rather give you guys a worse way to do it, but that is consistent and that you can use no matter this framework, no matter the setup, no matter the daily conditions, no matter the asset, right? This specific logic is about ranges and pivot points. That is something that has existed and will exist for the rest of times because that is how markets work. That's some bullshit. It is ranges and pivot points. So understand that once I break through this important pivot point, now this is my invalidation level because it is my next important bearish pivot point, right? You want to call it support and resistance, you can. I never learned any of those concepts, but I've been told that it's very similar to what I show here. So I'd much rather tell you guys, hey, always use this to trail your stop, but you're not always going to have the best stop. Do we care about that? You should not. Definitely not. Because you should try and find one logic that works for everything as you're starting off. Of course, for more experienced traders, just forget everything I said because you're always going to be looking for the best way to trade, right? Overall, other than this long, I did not consider anything else worthwhile in the morning. Now, looking back, of course, this trade, this short was a retracement. This could have been a very nice trade, to be honest. We took current high of day. There is SMT. There is a lot of SMT. I mean, I don't even have to be that precise. There is actually no SMT here specifically, but there is SMT here, right? Still valid SMT between NASDAQ and ES. But it doesn't matter about that, guys. So you could definitely consider taking this short. There's nothing wrong at all with this short. It's a great short. It just did not reach potential profit. So if you look here, I have inversion fair value gap, and order block. Your stop is all the way up here. And I mean, yeah, sure, I could have taken profits at 2R. I could have taken profits at 1.7R. But my model tells me that if I'm trading a retracement, I'm going to be looking for the first discount in efficiency. If I'm trading a retracement here, using the premium discount of this range, then the one in the 5 minute, there isn't a discount in efficiency until that last quarter. So I went back down to the 1 minute and saw that the first discount in efficiency in this case is not this order block. Important to point out, there is a fair value gap adjacent to it. So this is my order block level. It is this fair value gap. So for me, my target was this fair value gap. Now, of course, I could have looked to take a partial along the way, perhaps based off of standard deviations of this. Like, see, for example, if I would have only taken a partial at 4, would have been a nice 2R, but I was greedy. Since I missed the morning trade, I'm not going to lie to you guys, I didn't even have these standard deviations on my chart. What I was looking at is, hey, give me money because I missed that. I'm just going to be straightforward with you guys. I feel like it's much more valuable to you guys to learn from my mistakes than for me to lie to you guys and tell you like, oh, this was super easy. Hey, I traded this today and had no issues in here. Look, I had the perfect exit here. No, I really did not. But at least I was smart enough to get broken even here. I mean, there is no way in hell I'm going to be up 2R and then go back to a loss on that position. All right. I'm happy to risk unrealized profit, even though that is potential profit that could be in my heads, but I will never risk more than an additional on a winning trade. There is no point, because as soon as this becomes a potential winning trade, so for example, being up 2R, that means I am in my 70%. I'm looking for an English word, but all I have is trench. But I know it's not a trench, but in my wave of 70%. What does that mean? That is my win rate. So now this has the qualities, or just it is a win, right? But it doesn't make no way in hell I'm letting a win turn to a loss, right? I can let a loss turn into a win, right? So if a trade starts bad, I can definitely hold on to it, not move my stop, and be very happy. But when a trade is in profit by a decent amount, now I have to go break even. I can no longer risk my initial capital on it. That is just my mentality with it. I do believe it is very useful. And then, is this long valuable? Not at all. There is no reason you should ever long this, in my opinion. To see a potential long continuation, I would have to retrace to my first discount inefficiency. And if we look right here, we did. All the way down here. And up until that point, there was, of course, some lunch consolidation, but then we were all bearish. Even after we took lunch low, we kept being bearish. Why? Because we did not reach our first discount inefficiency yet. It is that simple. And even at that point, it does come a little bit higher, I believe, with the adjusted range. But for the morning, this long has no, what is the word for it? I keep forgetting my words. I'm super tired, guys, by the way, since I've gotten back. Big week, right, of trading, coming back from vacation. But don't worry, I will take some time off this weekend, recharge, and be top-notch for next week. There's also SMT at those highs, but at that point, as I said, there is really no other objective than looking for retracement to a discount. If I was to look for continuation, as I said, it would only be after this level is met. I just want to double check our first discount inefficiency, because since we made a new high after, of course with SMT, well, our discount inefficiency changes. So it's still back into a 1 minute chart. Since the 5 minute chart does not have one, it actually doesn't change. Since, as you can see from this order block, it is still above a premium. There is this inversion fair value gap, but it is lower than this one. So first discount and efficiency in this case would be right here. Let's actually, dude, I literally made some templates for it and not even been using them. So overall PM session, what are we learning from this? Well, straightforward, we are bearish. And here, let me actually bring all the way up since 130, right? We are bearish for the PM session. Now, do we have bearish setups? Well, as you can see, we have. But we also have some very nice consolidation. Now, would I look to short here? Why not? Even though we did have a big move, why not? But it doesn't SMT at the highs. There's a lot of divergence right here. Well, at this point in time, we actually don't. But looking at this setup specifically, we do have SMT at some highs. I believe I see it. Oh, well, we formed SMT and then invalidated it, and we had SMT at the lows. So taking a short here is very risky, but at least this move lower on ES invalidated the possible opposite and SMT, right? Divergence. So in this case, I mean, it is very hard to say, to be honest. It is like very on the verge. And what do I always say? When you're not sure, you shouldn't take this trade. So does it follow the rules? Well, there is no SMT. So already it's a worse setup. You've already expanded quite a bit, right? So you're taking a short in discount of a range, that's not what you want. So that's already another thing wrong with it. And if we look at the stop loss, this is your 3PD array stop loss. I mean, it's not too big, right? Compared to the morning, I mean, this is 16 handles. But then do you have a clear objective? Well, I do. Does it offer enough risk to reward? Yes. So for me, two things wrong means no trade. But if you're trading this model aggressively, then this could be a valid trade. So I do want to highlight it, even though this is not a trade I would take. Now, where is the short I would take? Where is it? Is it this one? Where is my SMT? Yeah, so a lot of divergence once again in these areas. But where was my SMT? Oh, there it is. A little hard to find. But right here, just between these small candles right here, you have a divergence, right? Right here. A little easier to see in this area. So technically, correctly drawn, it would look something like this. All that to say, now I have SMT. I have retraced at least a little bit into my range. Now, have I retraced all the way to a premium? I was going to say no, but yes, we did. All the way to the first premium in efficiency, no, not yet at this point. And that might be why it did not work out. If we look at this, the only short that worked is the one that happened after reaching the first premium in efficiency. Not gonna lie to you guys, this is not a criteria for me taking a PM continuation trade. So I don't want to bullshit you guys. This is just a very nice, well, might not be a coincidence, but it's just very nice alignment. But this was still a very good short in my book. So although the first one was not valid, this one definitely was. and you would have had a fair value gap, order block, quite a wide stop here. But does it offer enough risk to reward to your target? Once again, with our first discount and efficiency, yes. You would not have had to wait long for this one. A minute and 30 seconds later, probably, you would have gotten stopped out for finally giving you the successful trade after, I mean, at that point in time, you would have been watching the charts for an hour and 30 minutes if you lasted that long. But it doesn't, you would have had a beautiful breaker after reaching your first premium and efficiency. If we look at the 3-period array stop loss rule, if I remember, yeah, there are no fair value gaps there, but there was an inversion fair value gap. If we look at the low of this candle, this is 24,755, and the high of this candle is actually 24,755. So no inversion fair value gap. I thought I saw one today. Maybe there was one on micros, because technically for me, my stop was up here. So I had inversion fair value gap. I had, but it doesn't make, sorry about that, guys. I'm seeing that this is invalid, but it doesn't make, right? Because we close below it, which makes it inverse. And once we close back above it, this is no longer an inversion fair value gap. So your correct entry would be on this fair value gap. Wow. Well, I love finding bugs in the indicator, because I don't see that live. This is only bugs in replay mode. In live mode, it would have recognized that. But I actually like finding them so I can fix them, because no one reports bugs anymore. And I don't know if that's a good thing or a bad thing. But right here, so you're entering off of this fair value gap, right? So you have fair value gap, and then you have order block, and then you have all the way up here another order block. Now, for me, this is quite a sizable stop for this move. I would definitely prefer to keep it down here, which is what I personally did. But you could still have it all the way up here. And as you can see right here, first discount 2.78 R. I did reach all the way down to that first discount. As you can see, it is straight at 4 p.m. This is my only successful trade today. If you disregard break-evens as successful trades, but definitely what I was not full risk. Sorry. At that point in time, I had made plenty of mistakes, and now I was getting back on track. I was happy to take another trade. I was still break even on the day, pretty much. I was probably down $200, but I'm not going to take a full risk trade because I've already taken 3 trades today, right? So what am I going to do? I'm going to take a small risk trade, and that meant that I ended the day up $600. But I'm very happy nonetheless, even though with my regular risk to reward that is just barely over 1R realized, very happy with those results. I tried the indicator today, really enjoyed it. I'm very glad to hear that. I run both the key times and the uni. Awesome. Just to let you know, Tricks, can I show this? Yes, I'm pretty sure this is safe. Okay, so if I go, where is it? Why do I not have my own personal indicators as favorites? Oh yeah, because I'm always using the updated ones. But if you look here, you have key times and opening prices, but you also have rise that opening gaps. Opening prices is what I'm looking for. Let's do this. And yeah, okay. I didn't even share my own indicators to my account because I'm using my own personal scripts. That would like, it's not telling me when to full port. That fair bug report. But you also have opening prices is what I was trying to tell you, Tricks. So instead of using the old version, which is key times and opening prices, you should use opening prices, which is the updated version. You might notice that there are a few differences between key times and opening prices. I've been thinking very long and hard what to do with this, but this is the old version that has, I mean, I find it ugly personally because I made an updated one, right? Where you have candle, so you have time frame based levels, you have key levels, and you have infinite custom levels here. If you don't understand how they work, we have a very detailed tooltip along with an example below to show you exactly how they work. I mean, the old one was good, but I mean, I personally leveled up as a coder and understanding how to make a tool that works for the most amount of people, right? Key times was made for ICT traders, and then just a bunch of random shit added to it. Opening prices is actually made to be a professional tool that can be beneficial for any single trader. So I was thinking of actually making just this one free, and just like making it as an update to key times and opening prices, but it doesn't make, but I'm not sure at that. Jalal, you should go ahead and check are you an insider? You're not an insider. All right. So yes, the SMT indicator will start testing tomorrow, which means that should be released within the next weeks or so. If there are a lot of bugs, maybe 1 or 2 weeks. If there are no bugs, might even be this weekend. Well, no, it won't be this weekend. I'm not gonna lie to you. So 1 to 3 weeks, and yes, we will release the SMT indicator. Now that will definitely make my toolbox complete. I am tired of drawing them, guys. On my own personal trading, I already have the indicator running at all times. If we are insiders, do we get it earlier? Well, yes, but that comes at a price. If you're curious, Terrell, I believe you are. Yes, you are an insider. You can go look at the announcement that I made in Insider Updates. It is part of the member lounge. You will see everything. You do get it earlier because you are testing the product, but being a tester indicates that there is feedback to be provided in the form of professional reports. So only for the people who want to work for it, yes, you are rewarded by having access to it earlier. Do we have any questions, right? This is what closes the day for me. Truth is, it's really all about the morning log in my book. Of course, the end hour short is also a great opportunity to look for a retracement. Any other trades aren't too valuable other than the failed short, of course. But it doesn't make... Want to learn the lingo here. What is discount inefficiency? And you mentioned that you wouldn't go long unless price hit that area. I am happy to answer that, and that will be very useful for beginning traders. Let me just mute myself real quick. I have to sneeze. But it doesn't make, 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 but it doesn't make. What I actually meant to say was blow my nose, not sneeze, but it was fucking starting to run, guys. All right, so I had to run. I am back now. Let me drink some water and get right into it. But it doesn't make... All right, so ranges, right? I don't have to explain ranges. I've explained them thousands of times. I feel like I actually re-explained them today as well. But when I say first discount, first premium, I basically split ranges into premium and discount. If you're unfamiliar with the concept, simply get a Fibonacci tool, have 1, 0.5, and 0. Everything below is what we call discounted price. Everything above is called premium price. All right. So what do we mean by that? Well, it's very simple. I want to concentrate shorts when the price is worth too much. It's at a premium. And I want to concentrate longs when price is at a discount, when it's cheap. And if I'm bullish, I'm going to expect price to form bullish ranges and then retrace to a discount to give buyers another opportunity before breaking that range, which of course will form a new one. And in trending conditions, and then looking for the same exact thing, right? A retracement to a discount for a continuation. So when I trade, I'm looking to trade expansions or retracements. Those are the specific moves that I personally focus on. Since today, I was expecting a bullish close. I mean, very hard to not expect that after this amazing overnight movement. In that case, I understand I'm bullish, which means that any long I take is going to be an expansion, and any short I take is going to be a retracement. If I'm trading a retracement, I'm looking at my, this is where I like the 5-minute a lot. And of course, when I'm looking later in the day, the 15-minute is something as well. But I'm looking at the entire range of the move. So this is the range of the bullish move. And I'm going to look to target the first discount in efficiency. Why? Because after that point, price no longer has a reason to go down. It doesn't mean it won't. It just means it doesn't have to. And when it doesn't have to, it is when I want to have a partial or no longer be in this position. It is the same if I was going long and it was a bearish day and I was trading long retracement. My target would be the first premium in efficiency of a bearish range. So that's first discount, first premium, and premium and discount ranges. This is how I utilize them. This is how intraday I analyze charts. And this very simple concept is actually the reason why I'm almost never lost intraday. Like when I saw this move lower, it makes sense to me. We are now going to retrace. Oh, we have to stop. Why? Because we're doing lunch. We do bullshit during lunch. That's why I don't trade it. All right. Lunch. And then PM session. Oh, okay. Well, we did not finish our retracement. So now we can keep going. But it doesn't make I personally interact with the market specifically. Any other questions before we call it a night here? And Duval, I did want to say you did not react in the member area. You could request to be a tester. If you do want to be considered for a tester job, right, part of the insider program of Rise Statistics, do just drop me a DM or something and I'll add you in there. All right. Been here for a while. I'd be happy to have you in the insider program. But it doesn't make. Seeing a few of you guys type, I'm going to give y'all a second, but this is going to be it probably for tonight. But it doesn't make. Got any question for me, SJ? I don't think so. Oh, can you consider making a different channel for new members that come in rather than the general? Yeah, for the welcomes, right? Or like the little bot that welcomes people. I considered just leaving it altogether, because the truth is general is empty. If I remove that, nothing much happens in general except me talking about it, right? It's mostly futures traders at this point. So when the Discord becomes bigger, actually, I will just fully remove the welcome messages altogether. But right now, I'm not gonna lie to you, they're just a great way to keep it flowing in general chat that is pretty much dead 100% of the time. I mean, what are we now? 850, but not a lot of people talk, right? And I mean, I prune inactive accounts because I don't want inactive accounts in my Discord. But a lot of people just don't talk. A lot of people just are here for their videos, or are here to support me, or are here to follow along what I do, but that doesn't mean they want to talk, right? So it does stay for now. But once the Discord gets to a sizable, to a bigger size, pretty much, yes, it will be changed. And you might have noticed I said once, not if, because as soon as I bring it back into gear with Rise Statistics, we are going to have close to 4,000 members in this Discord for sure. So I'm getting ready for that point. But until then, general will stay as welcoming users. Hopefully that doesn't make you too disappointed in that sense. On that note, though, guys, I'm going to call it a night. I am fucking dead tired. Boo, Riot. All right. Well, Riot, you're not happy? This is a free Discord. Get the fuck out, SJ. Nah, I'm just kidding. Don't leave. Appreciate you. Appreciate you very much. Thank you all for your continued support at all times. I'm with him. I'm out of here. All right. People are rioting in the chat right now. What is going on? But it doesn't make. Wish y'all a great night. Y'all are fun. Y'all make a day that was pretty shit for me. I mean, I made a lot of mistakes. Turns out it was a green day, but doesn't mean it was any easier. I'm dead tired, and y'all are making me have fun. I appreciate you all presenting yourselves to these reviews. Definitely makes it a whole lot better than talking to myself. Have a great night, you all. Good luck if you are trading tomorrow. For myself, I will not be. You all have a great night, and we'll see each other on Sunday for our weekly outlook. Sorry. Bye, guys. Have a great night.